What's happening, guys? Welcome to another Sunday Scan. Nate is currently on vacation working on his Sunday tan, so Stan and I are going to take care of the video for today. We have a lot of great topics. Stan, thank you for joining me.
Yeah, absolutely. Thank you, Chris. Glad to be here.
Yeah, of course. So we have a lot of good topics to cover today. We're going to recap the CVNA trade. We're going to recap some of the AI movements, the crypto run, some of the gamma runs, and the all-day faders. And there's just an action-packed week. And Stan and I both traded a lot. We had a lot of good ideas from last week that ended up playing out. So we'll go through those. And that way it's not just recognizing those, but learning how you can use what we're talking about on here and the ideas to plan for the week, to design your own trades, and to really make it your own. So to get us going, Stan, could you please walk us through the SOUN trade? That was a big one this week and had a lot of attention. Could you give us your take on that?
Yeah, absolutely, Chris. So with the SOUN trade, I mean, it really started a couple of weeks ago when we had the NVIDIA earnings and the SMCI craze, et cetera. Where they came out with a report of NVIDIA owning some sort of a stake. And, it ended up being just a rehash from several years back that NVIDIA had, a few thousand, a few 100,000 shares, which in the grand scheme of things, obviously that's immaterial. Right. But essentially that put the wheels in motion. And then we went into this week. They had earnings report that came out on Thursday after hours. And the stock essentially, the overall move started from around $2. And now on Friday, I believe it closed right around 6 flat. First going to 7 and some change, and then closing flat. But essentially, it's one of those moves where it provides a great opportunity because it is in the spotlight. There is tremendous volume that went off during this previous week of trading, and for that, it provides a great opportunity when it comes to the liquidity. You can size into the trade. You can manage various aspects of the different levels. You had the options, on the back end also being part of the move. So overall, it's one of my favorite type of setups when we have real liquidity, real volume, and we're able to take advantage of the opportunity.
Yeah, and the options move with that was one that you and I talked about quite a bit. And it's, we've been seeing things like SMCI, NVIDIA, large names, large caps that really are very options driven. But this was an example where you had a much smaller name, $1 billion market cap or, somewhere around that range. And it was really being driven for a while in the first half of the week by call option buying. And so just to recap of how the option chain can move a stock, it's basically as people pile on to that option chain by buying calls that are out of the money, the person who's selling those calls, the market maker takes those on in order for them to keep a balanced book, or in order for them to keep from getting out of whack or taking a position, because the market maker, they want to be neutral. They don't care about the calls or the puts. They're holding them. And so in order to hedge the calls that someone else is buying, they need to buy the stock to basically remain neutral or to keep a neutral positioning. And so as people buy thousands and thousands of call options up the chain, the market maker starts buying stock in order to hedge that. And so when the option activity causes the hedging and it runs the name up, that's known as like a gamma run. And gamma is just when basically the option activity is a major influence on the movement of the stock. And so we really saw that a lot with SOUN, and we were talking about it in the lounge. And I think we'll get to some of like the unwinds later on, because we saw a similar move in something like Mara. But I think it's helpful to think about it in terms of front side of the move, back side of the move. And we're familiar with that from, basically the equity itself or the stock itself, wait for the run up, the failed follow through, and then the backside. But if you look at the option chain, it's doing the same thing with the implied volatility. And so as people are piling into those calls and the volatility is rising, you have that front side of the move. And then as you have some of that volatility come out and they start to sell some of those calls, that's when you can get that backside of the move. And so just to understand a little bit of the option side, that can help someone who's trying to short it or trying to long it really make a better decision, because if you could take into account that key variable of the option activity, I think that you can trade it a lot better. But before we move on to the next part of the section, I want to draw the winners from last week for the PXLW, I believe that was the stock. Of what concept does that represent? And that is an anchor concept. And so it's a semi name, or it's in the semiconductor industry or AI industry. And so something like NVIDIA is the ship. And so something is driving that sector. And then you have, going down the food chain, the smaller names that are dragged behind it. And that acts like an anchor. And so we have two winners for t-shirts from that contest. And if you look at the text description of this video, we will announce the winners there. And so moving on to the next part of scam, last week we talked about CVNA, and that was an idea that I had of really a name where you had a lot of things come together, and what I call, just a confluence of factors coming together. And we talked about how they had earnings. The earnings took it from being a terrible stock on its way to bankruptcy, a lot of people shorting it, to kind of revaluing it from being a really bad company to just a mediocre company now. They're break even with the cash. And so that revaluation takes place, and that shot the stock up 30% or so. And the whole thesis around what was going to happen with CVNA was, as that was getting revalued, there's still a ton of short interest on it, 40% or so, and you had call buying activity. So the same kind of gamma concept, you had some of the option chain running it up. And you had that over multiple time frames. So not just buying it for the last week, but for several weeks out. And so when a bunch of factors come together like that, and also the technicals of higher lows, higher highs, and the current market cycle that we're in, where you have a lot of short squeezes, that's what I call, that's like a confluence trade. And that's a lot of what my style is personally based on, where I just look for as many things going in the same direction as I can identify. And when you have not just one or two things, but 4, 5, 6 things all happening at once, you can really get a good read and prediction on what might happen to a name. And then you can craft your own trade thesis off that. So we saw that play out to a certain extent in CVNA. It had a nice move up, from the mid 60s level. It's closing at around 82. And so, we have this kind of slow grind moving up. And I think that we're going to see that continue into next week. And you start to see some of the call buying roll higher. So we had some heavy call interest at that 70 mark, and those rolled up to that 80 mark. And for the next couple of weeks, they're rolling up to the 90 level and the 100 level. And that's what we were thinking could possibly happen next week. And so the ultimate idea here is, I think that as this is going to keep grinding up, as people keep rolling higher, unless there's news or unless there's an offering, I think that this is going to result in some kind of blowout, towards or past that $100 mark. And then I think we're going to get a Thursday or Friday fade off in it. Once again, using the concept of the front side of the move for the option, the gamma, the front side of the move and the back side. And so as things get closer to expiring, on Thursday, Friday, that's when you could really have the stock unwind if it starts going in the wrong direction. So CVNA had some really good trading opportunities on it this week. And I hope that some of these ideas make sense. And it's just a reminder that if they don't make sense, this isn't a trade that everyone has to try to take, or it isn't a trade that people have to try to force. This is in my playbook because it's what I'm familiar with, but that doesn't mean that just because I can recognize a certain pattern that it's right for someone else. Just how, Stan and a lot of other people, they have patterns that I don't focus on so much. So I'm not really a short seller with equity. I do more options and long equity. And so you just have to find something that's within your playbook that makes sense to you, and then craft a trade around that. And Stan, were you watching CVNA at all this week?
Yes, I actually was watching CVNA. It's not quite in my wheelhouse yet. What I'd like to do is, as you mentioned on last Sunday video, and leading up to this week, as end of this week as well. There truly is a great opportunity coming. For me, as you know, I'd like to focus more so on the short side. I did entertain some long positions. However, I just know myself, and even if I do long it and I get in at 76 and it pops to 90, I'll probably sell, and then next week I'll be upset when it's at 155. But overall, it's something as one of my main watches for next week. And even if I don't participate on the front side, even if I don't take the long position, it does not mean that I don't get value out of watching the stock, because as the move progresses, I get to notice the liquidity zones, I get to see the areas of interest, which then help me define my thesis for the other side of the trade. It's always valuable information to extrapolate from the move, regardless if you trade only one side of it. I think that really comes down to what you're most comfortable with. But as far as watching it, absolutely, it's something that I have been keeping an eye on every day. Similar to the SMCI trade, I did not participate on the long side, but I was there for the short on that Friday a couple weeks ago. So definitely exciting week coming with CVNA, and it will be a prime spot on my screen.
Yeah, definitely. And I think it speaks to the value of having different perspectives with trading too, because some of the things that you were talking about last week with, identifying the all-day faders and what does the stock actually look like when it's going to be an all-day fader. I mean, that was something, and you have that, so mastered due to the short selling, that's something that I've really tried to incorporate more of, identifying when something's going to be an all-day fader versus when it is not. So could you talk a little bit about just the recap of the main ideas from the all-day faders, and then I'll actually give an example of how I used your concept last week to help me with the trade over the last week.
Yeah, of course. So as we touched upon it on last Sunday video, a couple of things that they use for identifying all-day faders are essentially, how do we behave out of the open? What does the opening print look like? What was the price action pre-market? And then most importantly, what happens once we break under a key level, whether that would be break through pre-market highs and stuff and then remain heavy, or break above VWAP and then stuff and then remain heavy from there. Just this previous week, we actually had a couple of great examples. Let me just look at my notes. We saw BIVI on Friday. That was a great example of an all-day fade, to where it opened, it ramped up right out of the gate, and then it was just failing throughout the day, staying heavy. It did not give a reason to get out, and essentially you could have captured a big portion of the move. We also had HOLO on the 26th, I believe it was Monday. That similar situation as discussed on last Sunday video. It opened, it stuffed into pre-market highs, it tried to hold, and then once VWAP failed, even with every swipe test, with every attempt to push higher, it just kept meeting a seller somewhere along its path. And then, of course, there is the other side where you have the ones that don't fail throughout the day, and those are the ones that raise a red flag. And as we identified, a few red flags are, if it's 10:30, 11 a.m., getting close to noon, and you're not making new lows, and it's just consolidating for the rest of the afternoon within a small size channel, and you're just going sideways for 1, 2, 3 hours, then towards close, some of that inventory, some of that risk management may need to get checked, as everyone is coming to the same realization at the same time around 3:15 or 3:30. Wait, this didn't fail, I should probably cover some. And then you start to see the domino effect into the close. So we had AKLI was an example of that earlier this week on Monday, I believe. We had ADIL was a great example of that on Thursday of last week. And also MTC was a great example of a failed all-day fade on Friday.
Yeah, and it reminds me of what you were just mentioning. CVNA on Friday, a great example of that. Of spiked up in the morning, flushed a little bit, and then just consolidated. And you see throughout the day, it's just getting soaked up, and someone's there, someone's absorbing that. Whether it's someone's covering, whether it's longs, whether it's the option activity, something is holding it up. And when these things, when they look like they're ready to unwind, but they don't, it's like here's your chance. Like if this thing wants to unwind, if people want to sell, like here's your chance. And if it's not, that's telling you something. It's not ready to unwind yet.
Right. And I think that's an important aspect to notice, because if you get hurt trying to fade something all day, and then you end up upset end of day into close of why you covered for either flat or a loss, I mean, it's something to review, right? You had a period of 2, 3, 4 hours where it kept hitting that same level. It kept hitting that same demand zone. And it gave many opportunities to either adjust size down a little bit, or stop adding throughout the day. So it's really something that has to be incorporated into your way of style. You have to recognize the signs when they're there and pay attention to them, right? Don't just ignore them thinking maybe this will be an exception. Looking for exceptions in the markets can be very dangerous at the end of the day, because you end up being the exception and the top tick cover.
Yeah. And just looking for easy trades, things that are acting the way that you think that they should act. And if they're not, then either the read is off, the thesis is off, it's not ready. And so it's good to mentally, think about that of, is this doing what I think it's going to do? And if not, then it just might not be the right time. The trade can be there, but it just might not be the right time for that.
Right. And I think as you mentioned, another good example of the all-day fade this week was the crypto basket on, I believe it was Thursday. And was that something that you were participating in, or?
Yeah, so that was a nice day. So we had some craziness in crypto land this week. We talked about it last week, how AI has been, the hot sector, AI and crypto, and they've been taking turns. And over the last couple of weeks, you had NVIDIA earnings, coming up. That was the big catalyst happening. And so you finally had NVIDIA earnings, and earnings were great. And it's like, okay, now that the thesis is validated, we thought that there could be some consolidation for a few days or for a few weeks, or even upwards of a month. And the idea behind that is that, okay, once you kind of have this big event, NVIDIA earnings, it's now verified that the trend is in place. Now what? Like, what's the next piece of information that either helps NVIDIA or the rest of the AI sector to get revalued higher and to continue on, or will it stall out? And so this past week, it stalled out for the most part. And then on Thursday or Friday, we had Dell, DELL earnings, and that wasn't really a name that I was expecting to light the fire under the sector again, but it was showing that of all the in all of their segments, AI and artificial intelligence and like the equipment that is associated with that was their strongest sector by a long shot, and they have a backlog and it's growing. And so just like that, it lights up the sector again. But that was later on in the week. Earlier in the week, we had crypto. So as AI was consolidating, you had a huge move in Bitcoin from the mid 50 level all the way up to 62, 63,000, and that took a lot of the stocks with them. And so it's like we talk about all the time with the anchor concept of Bitcoin being the ship and the stocks being the anchor. And so the ship moves first, and then the anchor drags everything behind it. And we also talked about how the Bitcoin halving is coming up, where basically the amount of rewards that miners get is going to be cut in half come late April. And so that's a headwind for the miners. And so the slightest correction in Bitcoin, that really causes people to sell. And so we ended up having a really nice situation on Mara this week, where Bitcoin was going nuts. It was dragging the names with it. Mara was going higher. The options were going higher, and it had earnings on Thursday. And so again, with that, the vol building, you have and what is implied volatility or vol? It's basically just what's the chance that an option that's out of the money that basically goes into the money? What's the chance of this option being able to be exercised at some point? And kind of a silly analogy that you could use, it's like, imagine you're trying to write flood insurance and like you see dark rain clouds, and it's like that you have signs that makes something more likely. And so when you see a bunch of those rain clouds come in or a weather forecast, your chance of having that flood or that rainstorm goes way up. And it's the same with options. Whereas as you see signs that something is going to go in the money, you'll have the implied volatility reflect that. And so that is how you get that that big vol move. And so with Mara, it was building in that vol all week. The call buying and everything was built up, and then it had earnings, and the stock opened up. It tried to move a little bit higher, and then Bitcoin corrected, and so it pulled it down. And so what you had happen was that at the same time you had Bitcoin dragging it down, you had all those calls rolling off from not only the Bitcoin run but also from earnings, and so you had that giant gamma unwind. And so I took puts on Mara on that unwind day, and the entire time while I was in it, I obviously have my own thoughts and reasons for being in the trade, but I just couldn't stop thinking about your all-day faders concept of, does this have all the signs of, maybe it tries to test that move up at the beginning, but slams down, just constant failed follow through. It's heavy. It's acting like it's going to be an all-day unwinder. And so I was able to have a great trade on Mara. And a big reason for that was really thinking about Stan's concept along that way. And so again, just another example of how, blending styles, talking with people, sharing ideas. It's not a this or that. It's blend them, make it your own. And so thank you, Stan, for that, because I had a great trade and you're a big part of that. So I appreciate that.
Yeah, that's great to hear. It's there's no shortage of opportunities. I got to say this year. Whether you're long trader, short trader, swing trader, options, there's just been plenty of opportunities so far in the year, and I hope it doesn't stop.
Yeah, and I totally agree. And I think that unless we have some kind of broad market correction, which again, not in the business of making predictions like that. It's more just seeing what is unfolding and what are possible scenarios. But as long as AI is still pulling the market, as long as there's no negative move or news, I think that we continue to just grind higher until something changes. So yeah, lots of great movers last week, lots of good concepts. And Stan, you want to talk a bit about the the midday clear outs and like the high day clear outs. Could you fill us in on what you're thinking with that?
Yeah, and of course, the ticker that I wanted to focus on that we saw, I believe it was on Thursday, LVTX, and LVTX essentially, similar move, or similar story. There was a PR that came out that there was a patent or something, and then it ended up being just a rehash from some time ago. Also, some sort of partnership that it wasn't really there, or whatever the case may be. But again, that's just the narrative behind the move. The reason why things move, it all comes down to supply and demand, and the way the stock is structured. You can attach any sort of narrative behind that. So LVTX, it's something that we have seen before. A good example of a similar looking chart to remind the audiences, EBIX, I believe, was the move around mid-November in 2023, around November 15th or so. And essentially, we have this, this stock opens up and it's just flat, nothing special about it. And then it has some sort of a catalyst, something ignites it. And from that point on, it starts to essentially make its move higher. And this is something that I traded, and we also identified in the room some key levels. But essentially, we had this nice blow off move into the fives area for 480s or fives, and then of course it held the 450s. So this is something that we identified in the room as far as if it went below 450s, this is something that we could see a quick unwind down to fours, back to this previous congestion area, but it ended up holding. It cleared out. You can see it come back. It retests the previous resistance of, give or take $5 level, and then it does that final push. And here you have multiple signs that can be used to take advantage of this midday clear out move. You have your highest volume bar of the day sitting right there that puts in the top, and then immediately the following candle, it stuffs, it immediately slams down back to this 5 area, and then the level that we had identified in the room as being key was 520, and then once it's stuffed below this 520, then it came back and broke down VWAP. It tried to come back up. It stuffed again. And of course, once it failed 450s, the original level that we mentioned, essentially it just unwound the rest of the day. So this was a nice capture as far as the trade opportunity. We see these often. There have been a few other tickers that I don't remember the names right now, but this type of move, it comes every now and then. It's something that it's great to keep in mind as far as what a midday clear out move would come or would look like, and then essentially look at some of the key levels that it is holding, look at where the congestion area it is, and you can extrapolate a trade thesis from there with a proper risk, and then a very nice reward as far as being patient with the trade. Unfortunately, I only made it to around 360s or 340s, right around here, but was able to capture a good chunk of this side. And these midday clear out moves, again, the main thing to notice about them is they open, it holds, there's some sort of a catalyst that it ignites the overall move. It reaches that euphoric moment, the exchange happens, and then if it stays heavy, it will be just as quick of an unwind as the upside. One thing that I always like to mention is the market loves symmetry. And you can see it. This 1 minute chart is a little bit noisy, but if we put it on a 5 minute chart, you can see the aggressive move up, and then it's matched by a similar aggressive move on the way down. And that goes back to the point of, the market just loves symmetry for one reason or another.
Yeah, it definitely does. And it's like the expression of like easy come, easy go. And it's like the people who are in there for like some quick, unsustainable catalyst, that bids it up really quickly. And then as soon as that starts to stall out, the people who are in there are traders. And what do traders do when it starts going the other way? They stop out. And so it's like you have people, fast money comes in, fast money comes out, and you have that symmetry like you're describing. So excellent. Before we move on, I want to remind people to leave a key takeaway in the comments, something from this video that you find to be helpful or actionable. And next week, we'll pick the top couple of comments, and you'll win a free month of Investors Underground. So leave a key takeaway, and we'll pick the best one. Okay, moving on to the next section, and that is our main watches for the week. So as a reminder, neither I nor Stan are financial advisors, and these are not buy or sell recommendations. This is for informational and educational purposes only. So Stan, do you want to kick us off with what are you watching for this week?
Yeah, absolutely. So as you mentioned, Chris, in the beginning of the video, obviously CVNA is going to be on watch for me this week. It doesn't necessarily mean that I will trade it. However, looking at it from a pretty wide point of view, we are coming out of this nice consolidation zone here over, give or take, over the past 2 years almost, where it was looking like the company is going to zero, and then it had a nice run, and then over the last 6 to 8 months, we have been just chopping around this $30 to $50 range, and then just as of last week, we finally broke out of it. So this is something that I will be keeping on watch to see if maybe on Monday or sometime next week we get into the something that gaps up, it runs hard out of the gate, and then it stuffs. And I will be looking to take advantage of any opportunities there on the short side. And of course, if we gap down on at some point next week, I like to put it on a higher time frame view, and then find my areas of interest. So anything around this mid 70s area, or anything looking at this 78, 79s, 80s area, I don't mind scooping up some dips to potentially take advantage of any upwards momentum. And again, knowing myself and aligning myself to what and how I trade, my best opportunity will be when we see the other side of the trade. But as mentioned earlier, I always keep the front side in mind. I watch it because I'm able to extrapolate valuable information that helps me with my decision making later on. SOUN, that will be a top watch. And as we touched on, in the beginning of the video, they had earnings this last week, I believe, on Thursday after hours, which was this day right here. And interestingly enough, with all of this volume coming in, with all of this excitement coming in, there were a plethora of 144 forms, filed by insiders that just dumped a whole bunch of shares. I think there were two back-to-back days of 144s that we saw come through, and you have to start at some point reading between the lines. It's not a straightforward thesis. This is going higher, so it must be good. They have NVIDIA has a stake in them. I mean, again, it all comes down to the narrative and how that narrative applies to the fundamental basis of what moves the tickers. So for me, SOUN will be on watch. I had a trade on it on Friday as well versus this 650s level. So this will become a main point of interest. So ideally on Monday, what I'd like to see is some sort of a retest of 650s, maybe get towards 687s. That would be great. And then look to fade the trend there. If we have a gap down, and the gap down stays heavy, I will not be afraid to get into that trade and continue to fade the trend, as long as, again, it remains heavy, it stays heavy versus VWAP. If we do a swipe test, we see the sellers come in, so on and so forth. So SOUN will definitely be a top watch next week. And last but not least, I will be watching ADIL as well. ADIL is, we had a nice cleanup day. Nate speaks about them as well. We had a nice cleanup day here on Wednesday, where essentially the stock opened up. It ran into a particular level. In this case, it was near 280s, I believe, right over here. It opened up, ran into 280s, and then it just started getting heavy all day long. And every pop was met with sellers. So if you were price sensitive to this, if you wanted to, get out of the position, you got out of the position. If you wanted to sell on this rip, you sold on this rip. Any shorts that got in and did not cover, we had the following day of a failed all-day fade type of trade, where it ran into the morning and then it just held a trend. Then on Friday, we had a nice squeeze out day. They had I believe they have some warrants or something into the 290s area. Again, part of the narrative behind certain moves. But what I will be looking for on Monday is any sort of shove against this 350s, would be, or 350s, 360s would be great to see. Again, or if we gap down sub this 290, 280s level right over here, I would be looking to fade that trend as well, as long as it remains heavy. And I believe this completes my just a couple of watches for next week. Again, given the type of market we're in right now, it is very active. Friday we had 4, 5, 6 runners. Everything was going crazy Friday morning. So if Monday morning opens up and there's more opportunities, usually I like to have an idea of several trades, several ideas for the following days and weeks. However, again, the market that we're in right now, no shortage of opportunities. So we'll play it by ear if anything else comes up.
Excellent. And while you still have your chart up, if you could pull up CVNA, because I have a couple of similar watches, but maybe on some different time frames. So for CVNA, again, the thought process is you have the revaluation happening, you have the short interest up there, you have the technicals, you have the option activity, and you have the market cycle. And as those things work together in Confluence, as long as most of those factors stay in place, I think it's going to get dip spot. I think it's going to grind higher, and I think it's eventually going to push towards that $100 mark, and then maybe have some wild day, a wild squeeze out, and then there's going to be just a huge, massive opportunity on the backside of that move, especially if SPX or if the market in general coincides with that. So if we get some news that, hey, we get bad inflation news or something's going wrong with AI, and so one of the main themes slows down, we could have a pretty, sharp correction in the S&P. And when something like that happens, I try to have what are the names that are running and moving well, because everything's lining up correctly. And then if you have the market basically change, it can cut several of those reasons away. And so it's good to have those on radar. But if we don't have a market correction, I think that, and as long as there's no offering or negative news on CVNA, I think it's going to continue to perk, to grind higher. And I think we're going to move towards that 100 level. And then sticking with my, the two main themes, and I've been talking about these for the last couple of weeks of, the AI theme and the crypto theme. So if you could pull up DELL. So Dell, like we mentioned, it had that big gap up on the earnings. And if you remember, something like SMCI, it really had a similar gap up move. And now I really don't think that Dell has the same revaluation going on behind it, because Dell, you have one segment of their business doing well, but the rest are kind of stalled. And so I think that you have a big, gap up day, and then maybe just some sideways consolidation, maybe some slow, perking higher. But I don't think that you're going to have the same type of move as SMCI in Dell by any means. I think that attention is going to flow to some other names. And that brings me to AMD. I think AMD is going to be another great mover, just like we had SMCI and NVDA. I think that you're going to start having some other names like AMD, and then even things like AVGO, just things that are, secondary names, but you see they all have the same chart, they're all the same sector, and they're all following kind of NVIDIA in that theme. So I have a bunch of these names on watch. And basically what I try to do is, as the week plays out, as long as the theme is in play, as long as it's chips and AI, I look for what are the strongest names, what are people naturally buying anyway, and then on dips or on good entry points, I look for calls, weekly calls, or a couple of weeks out, and I see if I can play that for a relative strength trend. And then if we go over to the crypto sector, I'm watching MARA. And again, we had a big, run up, a big unwind. But if we zoom out to, even the several month time frame, you can see that that's a huge key level up there, that 33 mark or something. And I don't think it'll push past that to the upside. But if we have some kind of move in Bitcoin and it breaks all-time highs of, 68, 69,000, and if we get into the 70s, all bets are off. And these crypto names, regardless of what they have going on with the halving, they're going to make, either new highs or they're going to break multi-month, multi-year resistance points. And that's going to catch a lot of people off guard. So it doesn't have to be the base case that, Bitcoin goes to 70, 75 over the next month, but it very well could. And so I like to keep that in mind. And if that happens, then, that's the ship. What's going to be the anchor behind a move like that? That's going to be, on every headline, every news station is going to have everyone's attention. And then the last one that I'm looking at is Coin, COIN. And same kind of concept. I think that this is just how NVIDIA's one of the leaders in the AI sector. Coin and MSTR, those are really like the big players, the big boys in the crypto sector. And so, you've just had fantastic moves in those. And so those are on watch as well. And again, looking for relative strength as long as one of those two sectors, either crypto or AI, is in play. And then when the market's, making higher highs, higher lows, things are going well, I also try to keep in mind what are the names that are relatively weak and what's having a hard time staying up anyway. Because once we get a turn in the market and once we flush, I'm going to be going to those names first. And so we had some, more bad news on things like NYCB, the troubled regional bank. And so I think that if we have any kind of a market pullback and you have bad news from something like this, then I think something like KRE, which is the regional banking ETF, could be something that could be playable with puts for some relative weakness. But again, there's a great quote that says, I'm not predicting, I'm observing. And with relative strength and relative weakness, that's really what it comes down to. So that's all I have on watch. Stan, did you want to add anything?
No, I think I think these are great watches there for next week. Following not only what's currently in play as far as the theme around AI and around crypto, but also just great points on the market overall and what we can expect to see. And final closing comments for me would be, as far as focusing on what is in your wheelhouse, what's something that you're good at as a trader, what's something that you're comfortable with risk, and there's no reason to fight when you're wrong. If you're wrong, be wrong, move on, and come back to it when it sets up. And this also acts as a reminder for myself with CVNA or the crypto aspect if it's something that I am on the wrong side, and then literally just step back, reassess, and then come back at it with a more clear objective.
Totally agree. And that reminded me of something. Could you pull up the chart on SMCI, just because we were talking about the AI sector and, going off of a thesis. And I think a lot of people are under the assumption that, SMCI or something like that, it peaked out. It capitulated. It's done. The top is in. But what if it's not? NVIDIA just made new all-time highs. What's to say that SMCI, after a little bit of consolidation, that can't go up again? So it's not to say that you can't have a thesis in place, but it's just a great reminder to, you don't always have to be predicting, start observing too. And if something is going against your thesis, then take that new information into account. Just like I did a couple of weeks ago with my trade on ARM that didn't go as planned. I was being stubborn against a thesis that I had in play, even though the stock wasn't agreeing with it. So just be very cautious to people who are, have a great idea, a great thesis, but it's not acting the way that they think. And I think that SMCI could surprise a lot of people, and I would not be surprised at all to see it make new all-time highs over the next week. And, if there's a play there, I'll make it, but if not, I'll just watch. But that's really the last thing for me. So just a reminder to leave a key takeaway in the comment section, and we'll take the best key takeaway and we'll give you a free month of Investors Underground. And next week we'll have Nate back. We'll see if Stan and I let him back on the Sunday Scan videos. We'll see. But yeah, I think there's going to be a great week ahead. So Stan, thank you very much for helping me do this. And everyone have a great week.
Great. Thank you, Chris. Have a great day.